most of the time, before we spot any reversal in the market, price always send a signal. So if you are good at your analysis and you are conversant with the price action, you will realize that before any reversal or retracement, there is a signal in which price movement sent. So in today's video, we'll be looking at one of these signals that will help us to know when price is about to make a retracement or a reversal. Why you should know this is most of the time, if you don't know this, you can end up losing the profit that you have made already, or at the same time, you will be ending up entering a wrong trade at the point where price will be making a reversal. My name is Soji and you're welcome to Soji Forex. Thank you for subscribing to our channel, and if you are coming across our channel for the first time, do well to go through our previous videos and do not forget to like, share and subscribe to the channel. And above all, I want to get your feedback. We want to hear from you. So if you have any question, do well to ask in the comment section. In today's video, we are looking about divergence. And divergence is about comparing price action movement and the movement of the indicator. What are we trying to say in essence? What we are trying to say is, when you talk of divergence, you are referring to comparing all these price movement in the market. So you are referring to comparing price movement to the indicator. So the most commonly used indicator for divergence depends on what you want to use. You can use the stochastic oscillator, just as you have seen on my chart. This is MACD. So you can use stochastic oscillator, you can use a MACD, you can use Williams percentage range, but basically it has to be an oscillator indicator. Okay, so how can you use this and take advantage of this? One thing you must know is that divergence is one of the strongest reversal signals you can get, because it shows us the weakness of the current price movement. So it helps us to spot when market is about to start making a reversal, so we can decide on what action we will get. Alright, and if you have to trade this effectively, there is need for you to be able to know the trend you are in. So your number one condition checklist on how you can maximize the divergence is for you to identify the market trend, because we said divergence is a disagreement between the price movement, which is the price action they measured, and your indicator. So looking at this chart, this crash 1000, and you will realize that price is already in an uptrend. So what we are having here, we have price already in an uptrend. We have our low, we have our high. Here we have our higher low, higher high, higher low, higher high, higher low, and higher high respectively. So it is established that we are in an uptrend, and if we were to connect the trend line, we'll be having something like this, which is a proof that price has been in an uptrend over time. So each time price makes a higher high, you need to pay attention to your indicator. Okay, And remember, we established that whenever price is making a higher high, it is expected that if price makes a higher high, the second move to be able to take the previous high. That is what makes it a higher high. Now, the same thing is applicable to our indicator. Look at it. So this high move beyond this particular one. So it gives us a higher high. But looking at our indicator, if we are to draw the line on the top of our indicator, we realize that this point here of the MACD did not go above this particular high. So there is a divergence. So price is giving us a higher high. This indicator is giving us a lower high. Right. Now let's look at the next one. This and this is higher. This and this is higher. So here we are correct. Then we have this is higher than this. So this is higher, right? But let's look at what happened here. Now this, and when we draw this, you realize that this is high, and this particular one is giving us a lower high. And here we are having a higher high. So there is now a disagreement between this point, what is happening on the price, and what is happening on our indicator. So what am I saying in essence? In essence now is that here we are having a higher high. But when we look at our indicator, what is giving us is a low. So what we are having here, higher high, higher high, here is now telling us that we are having a lower high. So which signifies divergence, which is the disagreement. So it's actually showing, although the price weakness is not visible with the price action, but the indicator is telling us that there is a sort of price weakness on our chart already. So we need to begin to think that there might be a reversal. And of course, if this is your trend line, so we have done well, we have identified the trend, because you need to know the trend for you to be able to spot the divergence. So we have identified the trend safely, and we have spot divergence, which is this and this. So the opposite of these two is what gives us a divergence. So we will now wait. Now that we have spot a divergence, it is important that you mark your area of support and resistance. Mark your area of support and resistance. So what do we do? Here becomes our area. We have a resistance here. All our structural points are our area of support and resistance. We have another one here. We have another one here. So we've marked our area of support and resistance. Okay, so it depends on how you are trading it. So you can mark it as area of support and resistance, or you can mark it as an order block. Okay, I can choose to mark it. What we just mark now is area of support and resistance. I can as well choose to mark it as an order block. And how do I mark it as another block? I will pick each of these other block and I just marked my other block. Right. So now that I have marked my other block, and look at what happened. Price break this trend line, right? So if I am trading, because when I have this divergence, it's already sending me a signal that there is a weakness of price by the virtue of this divergence. So when I have price break this my trend line here, it's a signal that by trend line the trend has been broken, but by structural point, which is this level, price as well came down and break this structural point. You can see this candle that threw the wick down. So I have two confirmation already that this divergence is valid because it has bring about a break of structure. So this divergence has helped me from making an entry. If not for this divergence, if I want to make an entry, maybe I would have made an entry here, considering this bullish candle that is inside this cycle, because this bullish candle engulf this particular bearish candle. I would have said let me buy from that zone, right? That is one. Then look at here again. I would have said this is my trend line and price now is bouncing on my trend line with this little rejection and with this bullish candle in the middle there. I would have said let me place a buy, but I have spotted a divergence. So with that divergence, I'm expecting a reversal signal, knowing that this price have bought over time. So I'm expecting either a break of structure. Before I will decide, I will now know that truly the divergence have hold, and I'll be waiting for a pullback into my other block. And that is exactly what happened. Price break this structure here now, okay, by throwing the wicks. These wicks were break of structure, and afterward it has established the price that break the structural point, break the trend line. And remember, we have marked here as our area of resistance, right? Secondly, we can also mark that place because price have break structure, so we are now having an order block in that zone as well. So there is our bearish order block, and then price came back, played almost 100% of it, and with this rejection you will make your entry and you sell to the downside. And even if you are using normal support and resistance, considering that you have spotted divergence and a break of trend line, this is the trend line that was broken, right? So this pullback serves as a retest and it will be in this trade to the downside. So you will always wait for a break of it. You don't rush immediately. Now, one advantage of divergence and why it is good you trade divergence is because most of the divergence are liquidity sweep. So you are no longer a victim of liquidity sweep. Because look at what happens here now. This high, the liquidity of this upside was taken. and then price reverses. So after sweeping this liquidity and there is a break of structure, it confirms us that this other blocks here is more valid. So you won't be a victim of liquidity sweep. So you can find this divergence on many time frame, including lower time frame. But the higher the time frame, the stronger the signal. Here is a divergence. You see this low, see this low. Look at it. This is divergence. So if your trend line should be this, price broke it, came back, and retest, and it bought. So you can find divergence most often. You need to train your eye. It's very easy to find. This is first bottom, this is second bottom. And then look at it. This is divergence. This is divergence. Alright. So the divergence is more or less the inverse pattern of our W. Remember we said the first leg, the WF of two types. This first one to go, then the second leg is longer than the first leg. So this second leg take the liquidity of the first leg, and that is why it is most of the time 80% accurate. It will play out most of the time regardless of the time frame, and you can see how this plays out beautifully. So train your eye, watch this video again. There are other previous videos on the channel where we have talked about divergence, so I advise you go through and watch those videos again, and it will improve your trading greatly to the next level. And I believe you have gained value from this video. Please do not forget to like, to share, subscribe to the channel, turn on your notification bell so you'll be the first to get notified whenever I publish our next video. See you in a subsequent video.